guys, welcome back to the Independent Investor channel. Every now and then I'll roll out fundamental investing videos that speak right to the core of asking new investors the question of whether or not they have the proper investing fitness to enter into the stock market. Now, I do contend that everybody out there should look at the prospects of wealth building for themselves. But I think a lot of people, they get caught up in certain misconceptions about the stock market. Am I smart enough to succeed in investing? Investing is only for the rich. Do I have enough money to make money? I think a lot of those misconceptions really prohibit a lot of new investors from actually starting. And I think that's super unfortunate. And I don't think enough people are talking about really drilling down and defining an individual's investing profile or investing fitness to the market. It's super, super important. And I've just rolled out a new initiative within the Facebook group. It's called Units. It's actually a very, very new feature within Facebook that allows me to establish somewhat of a curriculum around a specific topic, this being investing, and it allows folks to go through this curriculum self-paced. It allows you to go through the half-hour tutorial that I've already put on there specific to this category. I've already attached my podcast on this topic to that unit, and this will be the final installment on Unit 1 in assessing an investor's profile or fitness to enter into the market. And some of the things that we're going to talk about in this lesson is to identify what your inflow number is with regard to your income. And we're going to compare that income or number with your outflows. I think a lot of people get caught up in habit-forming behavior and they get used to spending their money as it comes in. It comes in and they spend it. And I think there needs to be a deeper acknowledgement to the sunken costs versus the luxury costs. And this is something that I'll get into a lot more in depth in the lesson within the Facebook group. I'll help you understand what the 4 categories of sunken costs are: food, fuel, shelter, and clothing. I think those are probably the 4, and how you can drill down on each of those categories and help yourself really find that surplus capital within your budget. I think there's going to be a lot of people that benefit from this information. I think there's going to be a lot of self-scrutinizing, self-assessment. I think there's going to be a lot of people who are actually turned off by this because it can be very, very scary of a prospect for a lot of people to self-criticize. But here's the thing, you are going to have to be critical of yourself and earmark those areas that you need improvement in your life, whether it be with your budget or whether it be with your credit debt. And it's not going to be until you identify those areas of improvement that you're going to be able to succeed in the stock market or even get what I consider to be a green light to begin on a wealth building program. Okay, I always look to establish investor fitness before we engage in any type of transparency on what's out there and available in the marketplace in way of accounts and in way of ETF and stock that's readily available out there for any new investor to do some self-study and research to enter into. But here's the thing, it doesn't make any sense to pursue an 8 to 10% rate of return in the stock market if you're carrying $5,000 to $10,000 in credit card debt. And now if you're out there and you've just heard what I said, it doesn't mean that you'll never invest. I've been there, and I've been there multiple times in my life, and I've crawled my way out of this. The only difference between me and a lot of people that I see is I very simply had a desire to do it. That's it. It really does take a willingness to break yourself down and say, you know what, I need to change. And this opportunity really takes you and gives you the ability to take a time out on your life. It allows you to just take a pause and put a moratorium on your current program. It allows you to give yourself a couple months of monitoring your budget, monitoring that inflow, and monitoring that outflow. And this lesson will help you go through that deliberation as if it's a normal couple month session. And after that couple months of session, give yourself 4 or 5 months if that's what you want to do. The longer you go, the more of an accurate assessment on your budget you're going to have. And the better estimate you're going to have on areas that you can earmark for improvement or areas that really stick out as a red flag. And I think the real benefit to this is that you can start on the path of adopting this discipline as being part of your life going forward. This is something that I do subconsciously in my life. I don't spend a lot of money frivolously. And it's not because I choose to do that. It's because it's been a learned discipline over time. And I've learned how to deliberate and understanding the short-term euphoria that you get from certain purchases that you may make and are excited about in the short term, but understanding that that may not be in your best long-term interest when you're making those purchases. So make no mistake, this is just a starting point or a springboard into a different line of thought. And this is really going to help you identify where you are. It's going to identify what you need to do, and it's going to allow you to assess your fitness level to enter into a wealth building program going forward. If by nature of identifying some of these red flags in your budget, you're able to clean some of these up and eliminate some of them or fine-tune some of those sunken costs that you have to have, you're better off for it. And I think a lot of people out there can actually find a lot more than they think they can in their budget. Because again, I speak to the creatures of habit. We get into the spending habit of getting that paycheck and we're used to seeing it go out the door, and we don't really understand the granular nature of where those dollars are going month in and month out. This is your wake-up call. This is your opportunity to take that time out in your life and really take a hard look at your budget. I've established Unit 1 to help provide some of the framework for the self-deliberation that I expect. I'm not going to do it for you. What I am going to do is I'm going to provide you some structure, I'm going to provide you some guidance, and I'm going to open up the opportunity for you guys to hit me up with questions on the thread within the Facebook group. If you haven't joined that group, you're missing out. Guys, this information is free of charge. This unit is from my perspective, and it is aimed at doing one singular thing, and that is answering the golden question. Do you save more than you spend? Do you save more than you spend? And if you can't answer that question at this point, I highly suggest you kick over there and negotiate yourself through Unit 1, take the test. You're required to get 100% on the test. It'll be better for it. I think everybody should go through this awareness exercise for themselves and really start scrutinizing what it is that they're spending their money on. Guys, if you appreciate the message coming through, want to make sure and subscribe to the channel, hit the notification bell, leave your comments at the bottom of this video, and share this message with anybody out there, maybe that you know that's struggling with some debt, maybe struggling with setting and keeping a budget. Maybe they're struggling with identifying those things that they need and things that they think they need over time. Guys, thank you so much for tuning into the message, and good luck in your investment future.